Hello trader. To become a consistently profitable trader in this business, you need to be able to beat the bank. Now I know it sounds luxurious, but as a matter of fact, banks are the biggest mover in the market, and to become a profitable trader, there is no way but to have a strategy by which you can outsmart the smartest. As you know that in trading, most retail trader lose money. If you do the same thing that everyone is doing, then chances that you will be losing money like everyone else. But to become profitable trader, you need to know what everyone is doing, how the bank are beating the retail trader, and then you can do something different to beat the bank and to stay ahead in the game. So in this video, I'll show you a strategy that you can use to beat the bank. Sound interesting? Then let's get started. Okay guys, so before I begin, make sure you smash the like button and also hit the subscribe button if you haven't done yet. So let's see first this explanation of this strategy. It is very important that you pay attention and fully understand it. This could change your whole trading pattern. Now first of all, let's see a pattern here. Okay, what you see that there is, let's say this is a red candle with a wick here, and the next one formed just the same way. There is another wick, another red candle, it has created a lower high, and there is another red candle, it has created a lower high. Let's say this, after these three candle, what you saw that there is a smooth trend line has been formed. Now let's say this is a daily chart. Now what will happen on the 4-hour or on the even hourly chart? You will see a long channel where there will be there is a resistance, and the price was respecting this resistance in a nice way up to these three candles. Now what everyone will think in this time, that's what you need to always keep in mind, that what others are thinking, that you need to know. So what everyone will think that, okay, the price has created a nice channel, this is the resistance, now this is a nice trending market. Forex wizard told that when you see a resistance, sell, then you'll be selling from here, okay, short from here, stop loss just above the resistance. That's logical, fair enough, and then you maybe take a big risk to reward, maybe 1 to 10 or 1 to 8. Now the same thing everyone will do, because everyone is smart, right? Everyone will place their stop loss here, will place an entry. That's the logical, that's everyone will do. Now what is bank is doing here? You see, you need to understand it. Look at this. When you sell a market, keep in mind, when you sell a market, let's say from here, okay, and you place your stop loss here, and let's say your profit target is here, right? Now once you place your stop loss, let's say your stop loss is 1.9908, right? Now as soon as you sold, your stop loss turned into a buy order. Keep in mind, that means that as soon as you sell, if the price move in your direction, you are selling, you are in profit. But if the price goes on the other direction and hit your stop loss, then instead of seller, you will be turned into a buyer. Keep in mind, that is the secret that you need to understand, and that's how bank is beating you. That means that though you are a seller, bank is forcing you to become a buyer, because bank knows everything. They knows where did you put your stop loss, how many people or how much percentage of people buying or selling and where are their stop loss, they can see exactly. So when they see that majority of people put their stop loss here, because that it's not unethical, keep in mind, because they need, when they sell they need a buyer. Okay, so when bank selling a huge amount of volume, they need a buyer to buy that, otherwise how will they buy if they cannot sell? Then if they cannot sell, if they don't have a buyer, then the market will not move and you and me cannot trade, right? So what the bank will do is they will move the price the other direction, maybe investing or somehow they will move the price the other direction, so that you as a seller turn into a buyer. And once your stop loss is hit, you're forced to be a seller, then they will sell again. Okay, and that is happens over and over in the market. And next, what you saw, this candle, you see this kind of candle, that means that there is one candle or maybe two candle, you will find that has broken this trend line on the lower time frame, grab the liquidity. That is called the liquidity grabbing. This hit your stop loss, that means seller turned into buyer, they bought and the bank sold, and then the price is moving in the direction you want it to move, but without hitting your stop loss. And that is the first secret you need to know, how the bank is beating you before you can beat the bank. So now you understood how the bank is beating you. Now the same analogy is applicable to when you are a buyer. The same thing, that when you see a series of high or low, okay, let's say every time the price is creating a series of high or low, smooth trend line, and suddenly one candle is coming down, hitting all the stop loss. That means that in case when you are buying, now you are forced to be a seller. When you buy, your stop loss is a sell order and they are hitting your stop loss, that means you're forced to be a seller, and then they are buying, the price is moving in the direction. Now you understood clearly. Now what is how can you beat now the bank? That means that how can you avoid this manipulation? This is sometimes called manipulation, but I say it's a normal phenomenon in the market, because if they cannot sell or buy big volume, how the market will move? The market will stay in the same place, and as a retail trader we will not have also trading opportunity. So how can you deal this situation? The only way you can beat them is by patience and wait for the hungry whale to finish its meal, and then you have to hunt in the territory that is completely free to hunt. So let me tell you now what you will do. It's simple, okay? That simple strategy is that you have to wait for this kind of false breakout or manipulation or liquidity grab, whatever it is. You need to wait for this kind of candle to be formed in the direction of the trend in an area of value. Then you can find really good trading opportunity and really smart strategy. And if you can patiently wait for this kind of pattern, this kind of candlestick pattern, I'm sure that you will become a consistently profitable trader. Now let me show you a couple of real chart example where you learn this simple strategy, and then you can become a consistently profitable trader. Don't miss any part. Stay till the end of this video to see how it is doing. Okay guys, so let's see this example. This is a simple strategy guys, nothing complicated, just you need to pay attention and stay patient. See, this is GBP CAD on the 4-hour time frame. What you saw that the price first has created a double top formation here, nice double top. That means the trend is changed from this uptrend to the downtrend, and couple of dodges has been created, and the price broke down to this level. There is couple of signals as well. Let's focus on this one here, and the price came down to this level. Okay, now what you saw here, okay, at this point the price has created a smooth trend line in the lower time frame. If you draw this line here, you see there is a nice trend line. If you look at the hourly chart, what you see that the price has created a smooth trend line respecting this 20 period moving average, or even if you want to draw a trend line, that's a nice trending market to the downside. So this is a nicely bearish market. Now next, what happened after this trend line is formed? Look at this, what happened. See, this is exactly what you need to wait for, and that is the manipulation from the bank or liquidity grab or whatever you want to say. But that is where the bank is beating the retail trader, because when you see, let me replay this again, when you see this red candle, most retail trader will go short because it's a nice bearish engulfer. The price first of all broke down, created this narrow pattern. So this is a nice bearish price action. You see, always keep in mind, when you see a big move and then followed by this triangle, in most cases, almost most cases, you will see the price will break down. But instead what it did, so when you see this pattern, everybody will think, okay, there is a bearish price action. Forex wizard told that when there is a price breakdown, create a triangle, then it will break down. Wow, that's a nice trading opportunity, let's sell short. Then what should I put my stop loss? Just above this resistance, nice area, and I take 1 to let's say 5 or 10 risks to reward, and the next one, boom, just hitting your stop loss and then came back down. Hitting stop loss means basically you sold, but you are forced to be a buyer. Hitting your stop loss, grab the liquidity bank, and then the price moved in the direction you wanted to move. So what is the solution? Very simple. Whenever you see a market, wait for the hungry whale to finish its meal. Okay, so wait for the price to go up. Okay, if it is a downtrending market, grab the liquidity and to create a price action pattern that will tell you clearly that there is a false breakout happen. The price already grabbed the liquidity, that means the price has a momentum. Now I will be selling. So once you saw this kind of manipulation, then sell immediately. Okay, sell short. Keep in mind that the trend, the direction must be along the direction of the trend, and then you can target whatever you want to target, 1 to 2, 1 to 3, 1 to 4, 1 to 5. So that's you'll see how powerful trade it is, and that is what you need to understand. Wait for trend. Okay, so keep in mind trend, direction of the trend, area of value, and then wait for the manipulation to be finished, so that you can beat the bank before they are beating you. Now let's see one more example. Okay guys, so let's see this example on gold. Now this is the same situation but just a different structure. So what you see that in this 4-hour time frame, the gold what it did, look at this pattern here. There is a smooth trend line is formed with this candle, nice trend line, right? And then what happened with after this green candle, the price went above, crossed all this candle, broke this trend line on the lower time frame. If you look at the hourly or 15 minutes time frame, you see there is a smooth trend line has been formed, and then the price broke this trend line, crossed above, grabbed the liquidity, hit all the stop loss. After this might be, after this red candle, many people started to sell short because it's a downtrending market. Nice dodgy here, maybe selling short and keeping the stop loss above this high. That's the logical place for everyone, and then maybe targeting somewhere. The next candle, what it did, it went above, hit the stop loss, turned all the sellers into buyer, and then the price moved. Now after this kind of liquidity grab or after this kind of manipulation, normally price have a huge momentum, and that's the advantage the smart traders take, because you see after this kind of manipulation, the price normally moved aggressively to the direction. And as a trader, if you have the patience to stay for this kind of price action, for this kind of signal, then no one can stop you from being a consistently profitable trader. Now let's see one more example. Okay, so let's see this example on Aussie dollar. This is a bullish market. This is recent chart. This is still new chart. So what happened with this bullish engulfer? Look at this one here. Okay, so what is the significance in this candlestick? A simple strategy. Look at this. There is a very smooth level of support here. If you draw this one here, you see there is a quite a few candle respected this 20 period moving average as well as this level of support here, and in the past also this acted as support. It's a very strong level of support. Now what happened with this one here? Look, the price even crossed this wickless candle, because after this wickless candle there was a lot of people who was buying Aussie dollar, and all the stop loss just below this wickless candle, and huge stop loss. And banks and retail trader, banks and big boys, they knows where all the stop loss, where the people are buying and selling, and that the advantage they have taken. Let's say if you bought from here or wherever it may be, from this level of support, your stop loss just below this level, and the price, the big boys, they know this, they just move the price down, hit your stop loss. That means you are a buyer but you are forced to be a seller, and then they bought from you and the price started to move up with aggressive movement. And when you know this and you have the proper trading psychology, there is no way not to be a consistently profitable trader. I sincerely believe that this important educational video and strategy is helpful to you. If you find value in it, then don't forget to smash the like button, and also don't forget to hit the subscribe button so that you don't miss out any of the content that I am releasing every single day. Thank you for watching. See you soon in my next video.